Vincenzo'S Go Crypto Investing, and we're going to be starting another, if you notice down in the playlist, I got series starting, and another one that we're going to start is a weekly banking update on the banks and the financials, right? As this, we're starting to get this financial crisis that I've been warning about since I made the airwaves a couple of years ago, as we've had two major banks fail, and now Credit Suisse is having major problems, and they may be going belly up, right? We've had SVB Bank go up, then we had the crypto bank go up, and now in the rest of the banking sector, Wells Fargo is, if we look at the past, not even looking at the very long chart, because the long chart on most of these banks stemming back from 2008, they went down the shitter, and most of them have never even sniffed. They've never sniffed their old pre-financial crises of 2018 highs, but you can see Wells Fargo, year-to-date's down 6%, and from its peak, it's down more than that, right? And then the last year, you can see it's down 21% in the past year. So Wells Fargo, major bank, is having major problems. And this is a major issue as a financial crisis starts, if you start having major banks of the retail traders go down, and even institutional banks and banking that handle all the major financing. You can see Citigroup is down 18% the last year. Going back, you look at that, in the last crises, you can see they've never even recovered anything here. They've only made up 35%, but they're down 91% still in Citigroup. And this is a classic example of the crypto people. You need to take note. This is a major bank, one of the biggest banks in the United States. And after it had its big crash, after this same bank, Citigroup, went up 1,700%, 2,400%, 3,000% from the 1990s, and peaked all the way up $500, approaching $600. And after their big flush in 2008, when you had a big financial crisis, this stock is still down 91%, better than 16 years later. This is something you should take note of in crypto. This bank has a major utility, and it's still down 91% from its all-time high. Just because the price was somewhere at one point in time in history does not mean that it's going back up there just because it's been so long since it went up there, right? It's a major thing you need to take note of, and that's a little bit of free education that these shysters aren't telling you, right? And then if we look at Bank of America, the same thing. You can see Bank of America, after it had its huge flush and lost about 95% in the big crises, it came back up and almost got up to its old all-time high. And now it's selling off dramatically, and it's starting to accelerate the sell-off, and it's down 30.5% in the past year. Notice a theme? Are we noticing a theme here? Wells Fargo, 21% in the last year, right? And let's look at their all-time chart. They did the same thing as Bank of America. Better than Citigroup. They sniffed a rolled all-time high, and now they're falling, and they're down 21% in the last year. Citigroup's down 18% in the last year, but 92% since 2008's high. Bank of America is down 30.5%. JP Morgan in the past year has done much better, but overall, you can see they did the best through all the crises, but this one, the chart's got a huge, at the top of that, you can see right here, a left shoulder, then the head, then the right shoulder. That is a massive macro head and shoulders topping reversal pattern, and a targeted move from the neckline, which in our technical analysis breakdown on the banking sector, we'll go into that formation right there, but a technical target would be somewhere down here at around $45, and that thing's going to be coming way, way down soon in JP Morgan, but they've held the best over the last 15, 20 years. And then you can see the bank index is starting to have a huge sell-off, and the biggest sell-off since 2008's financial crisis. You can see massive red candles as this ETF that tracks the banking sector is collapsing on itself, right? It's floating on itself. So that's going to be a new episode that we're going to be starting once a week. I haven't decided the day yet, but we're going to start doing the weekly technical analysis deep dive into the banking sector, and then look over the banking news from the major banks, and then look over what the Federal Reserve is talking about that has relation to the major banks, right? Because that's a big thing, and we're going to need to pay attention to the major banks as this financial crisis continues, right? But that's for a little bit later on in this week. And in the crypto technical analysis, we can see we're having a nice bounce, right? After we had our nice pump, then we had our nice bounce. Good. You're rated number 1. You're rated number 1 because you're not advertising on the phone. Stop. Stop it, TradingView. But you can see, I just moved that. I didn't want to do that. We'll have to move that later. But down here, in the XRP, we're in the same consolidation pattern that we were in before. We're in this symmetrical triangle. If I zoomed out, you would see, but right now we're straddling on the very lower support level of that. And if we can hold that, which you can see 2 recent green candles right here at about the 36-cent level, we can bounce back, which I'm forecasting in the short term, to get back up and retest this critical 37 cents. That has been the mean of the trading. If we look back on the way left machine, you would see over the past, 12 months, 37 cents. It's been a major consolidation range, and I'm forecasting it to come back up into there again. And probably over the next week to 10 days, I can see it pumping all the way to 38 cents and retesting the upper portion of that triangle again, just like we did in XRP if we start to go on the way left machine. We double topped on it there, back on the 9th of the month, and then we came to lower support, and then we came back up and wick touched it back on the 20th of February, right, because it's a descending upper resistance, and then we repeatedly come down and wick down-ish near the uptrending lower support, and that's currently where we're at now. We know if we do break the lower support, we're coming down here to the top part of the VP volume indicator, and that's down here at about 32 cents, and that's what we would watch for an initial breakdown if we can't hold the critical level in XRP. And then if we zoomed out here on a brief look at on the zoomed out time frame, you can see that symmetrical triangle there beautifully. It started back there, several areas as we work our way from the past to the future to the current of upper resistance and lower upper resistance and lower support multiple times. A break to the upside would be 50 cents, and a break to the downside would initially go to the 29 to 32 cent range in red. And then if you broke down from there and we had a complete pattern breakdown, full lateral breakdown flush, we would hit that 18 to 20 cent target that I thought would hit in 2022. The prediction was made in October of 2021. We got pretty close. We got down to about 28 cents in 2022, but still 8 cents short of the call. But we made the call when the price was more than 70% higher the year before, so it was a pretty good call when the price of that fucking coin went down 82% from the time last year that we made the call, right? So we're very proud of that. You can see the hideous looking Bitcoin chart in the 4 hour. It has come down and consolidated like we drew out a few days ago, almost to a T. We drew that when it was wicking up there and started to show the first signs of coming down, and we thought it could do something like that. And the Bitcoin consolidation now is actually doing something similar to that. We had our initial fall, came back to that lower support at 24,000 and change, had a little bounce on the wick, came back down in a step-down fashion again, and now we're having another bounce. What is this just going to start advertising on here now? That's their new update, fuckers. And then we bounced again, but we're trading sideways with very little to no volume. I'm actually going to forecast if we don't get a double top up there, we're going to break down and actually fall down like our track shows on the next move to the downside. We're going to break to 24,000 and actually come down to the 200-day moving average of 23,000. And that is your short-term technical analysis on 7:19 a.m. of March the 16th of 2023. Peace and love.